just trying to stick to the 5 minute. Trying to stick to the 5 minute chart. Stay away from the 1 minute. Stop gambling and trading it like a video game. So getting better every day though.
Yeah, and just to speak to that a bit, I mean, I don't know what style of trading you prefer, but I've always found, when you are feeling rushed or you are feeling kind of antsy, the best thing to do is just pick a bigger time frame. If you're trading a 5 minute, switch to a 30. If you're trading a 30, take a quick look at the daily. So that always makes me slow down and kind of zoom out, figure out where we're at, bigger picture, right? But anyways, I'm gonna wait. Whoops, sorry.
The only thing I know is if I don't go to sleep on time, if I don't do like market prep the day ahead, the next day I probably should not trade.
Yeah, that's a huge thing. If you're and obviously sleep has to do with how alert and aware you are for the next day, but also emotionally, right? If you just got broken up with or got some bad news at work or something like that, that's also something you should consider when trading. If you are not in the best headspace or you're dealing with something else, take a day or two off the market, right? You're much less prone to make irrational decisions. Your patience will be better. It's just all around better if you're fully alert, in a good headspace, and all that. But anyways, I'm gonna wait one moment to get going here. It looks like we got a lot of people who are prepped and ready for this session. Happy to see all you guys in here. But just for any late stragglers to pop on in, we're gonna wait one moment here. But in that time, how's everyone doing today? Everyone do good? Everyone make some money? If not, did you at least learn something?
It was the best day for me, brother.
Awesome.
Yeah, made some money back from Friday's loss.
Feel that. Man, me too. Friday sucked. But glad to hear it. Glad to hear it, guys. Okay. Yeah, we can just jump right into it. There's a good amount of us in here. So, see a couple new faces in here. The Hunter, haven't seen you here in a while. Good to see you back. Dinko, you as well. And SJ looks like a new face. Boral, I'm not sure if you guys have been here before. So what these sessions are is just time away from the open market for you guys to get some questions answered. If you guys have anything related to charts, setups, the Fed, data, Trump, anything market related, if you guys have a question on it, I will do my absolute best to get you an answer for it. Okay. So it's a discussion, not a lecture. So we can go back and forth and we'll talk about a number of different things. So, there's no such thing as a dumb question. If you're interested in talking about it, we'll talk about it, okay? All right. All right. Who's got something for us today? What do we want to look at or talk about? Who's going to start us off?
Well, I have something I want to ask.
Sure.
When I see the levels you drew on the resistance and support diagonally, why do you ignore that huge dip that goes just below the line?
What are you talking about? On this chart?
Yeah. You see how the resistance gets broken a little bit?
Right here. You're talking right here.
Yeah, 2 times. Why don't you move the line down to match up with that?
Well,
what makes you move it up?
For one, yeah, it's a good question. For one, I want to preface this. I do not trade based on trend lines alone. Okay, so trend lines can be a nice guideline. Personally, I would only use them on very large time frames like this. I think intraday trend lines are going to get you stopped out and tricked out, trick trapped, fooled, and frustrated a lot more than they're going to work. But this is just kind of a guideline. So, as you can see, since October of 2023, the market's been in a very, very long trend higher, right? And this is kind of my guideline for that trend higher. So the reason why I may not be focused on this is because this was a news-driven event, right? This, if I remember correctly, God, what was this? August. This was the carry trade, I believe, that forced like $3 trillion worth of assets to be liquidated due to the Bank of Japan raising their rates unexpectedly. If I remember correctly, that's what this event was. But with that in mind, you can see that the bottom line here has still been respected far more times than anything down here. right? So even if we were to
Yeah.
connect it from here, I'll play devil's advocate against myself here, and we'll draw something like this from this low here, connect it through that low. Nothing's really been hit, therefore it's not even really a trend. You need 3 points of contact to verify something as a trend. But you can see here,
Okay.
right? Resistance tap, support tap, support tap, support tap, support tap, right? So this thing has been a bottom or a top 1, 2, 3, 4, 5, 6 times so far, right? And so that's why I've left this here. And again, this was a news-based event to where we got a short spurt of volatility in the markets, and we reclaimed it fairly quick after. So I didn't feel the need to adjust this. But again, this is not something that I'm basing trades off of. This is just sort of a mental guideline, right? So long as this trend is intact, I would argue that bigger picture bulls are still in control and we're still trending higher, right?
Okay.
Yeah, that's a good question. All right. Dinko, I see you're unmuted. Have you been?
Man, I've been super busy with school, so I'm just trading when I can, honestly.
Sure.
Yeah.
Well, you got anything you want to look at or any questions, or you just listening in today?
Mostly just listening. I honestly haven't been keeping a tight watch.
Sure.
Just kind of tuning in when I can.
Okay. Well, something must have brought you to the market recently, right? Can't be just boredom.
I liked, I was looking at the daily on NQ, and there's quite a few taps lower, but it looks like it's failed like every time so far,
NASDAQ.
right?
Let's check out NASDAQ. Yeah. Wow, that 2100 area or 21,000, big spot, big support.
Yeah.
You know, I would honestly, if we wanted to do the same thing that we've got going on ES, again, a lot of these levels have been adjusted just from the contract rolls. But if we want to draw something similar, we'll use this most recent low. Let's see what we can work out here. Daniel, I think you unmuted your mic. You got some background noise. Just a heads up. Appreciate you. So if I wanted to draw this trend off here, again, trends are never going to be super perfect, but if I had to just make a fair guesstimate, this one's tricky. They're not, like I said, they're never going to be perfect, but I would argue still that there's been no structural change to ruin the bullish trend.
Mm-hmm.
You know, here's your most recent low, higher low, higher low, higher low. Again, you could make the argument here, right? But you know, every low we make is still being maintained, and buyers, you know, the last time buyers were forced to step in on a liquidation that cleared out a previous low was right here, right? We had built a base for a good amount of, you know, about 2 weeks here, liquidated it, immediately reclaimed, right? So you're seeing that now where if we were to break under something like this, or God forbid something like this, that would be much more confident for a weak market. But at this point, you shouldn't be looking to continue chasing, right? So you'd probably want to use just this level right here, just this 2100. If we start to show weakness back under this, that's where I'd start to be concerned, just because we have built such a floor and such a solid base here. That would be concerning. If we broke under 2100, that would be something to me that would validate a confident trend lower, right?
Yeah.
Now we've definitely spent a lot of time here decision making, right? And we've definitely seen some sell pressure. Now I'll make the argument that much of it is derived from just pure uncertainty in the market, right? We've got a new president. You know, he's taken a lot of action real early with a bunch of tariffs and you know, a bunch of layoffs among federal employees and changing up the way that we were kind of used to things going for the last 4 years, right? So
Yeah.
a lot of this I would attribute to just pure uncertainty. But if you're looking across the board, right, inflation is still very low. Despite not being at our 2% goal yet, the Fed has done a very good job over the last four years, right? On top of that, we just got this last round of earnings, and while it may seem that earnings were bad because of the reactions, they are still growing. Corporate profits are still growing. Okay. So again, sometimes our expectations are just a little bit too high. And so despite the company reporting a strong, good quarter, they just don't live up to expectations. So I don't want you guys to think that just because Google and Amazon and Microsoft dropped on earnings, I don't want you guys to think that those companies are all of a sudden, struggling to grow. That is not the case at all, right? They're still reporting very strong, profitable quarters, and they're still year over year growing. Okay, so corporate profits are still growing. We've toned down inflation a good bit, and all else equal, there isn't a major reason to be bearish. Now, of course, there are some lingering effects or lingering events that could drive some sort of black swan event, right? To name a few, there's potentially a looming credit crisis among consumers. I don't know if you know this, but as of 2020, as of mid 2024, average debt is higher than average savings. Okay, so the average American owes more than they have saved. Okay, and on top of that, again, we've pretty much averted the commercial real estate crisis. Right, that's been tapered down. Another big one could be our debt. Right, so our national debt. We now, not that we have to pay the debt down, but the fact that we owe interest on that every single quarter, equating to more than $1 trillion that has to be printed every single quarter nearly, that is something to be concerned about because every dollar we print is adding money to the money supply, therefore devaluing the currency. Okay, so that would be an argument for inflation. So there are some looming things that could drive a black swan event, but that's the whole thing about them. They're not really supposed to be predictable. They kind of just become an issue when they're an issue. You know what I mean? So, all else considered, the way that people choose valuations in the market is based on expectations. And so right now, everyone expects, hey, Nicholas Rivera, you've got some background noise for me if you don't mind muting. Appreciate it, man. So the number one reason or the number one metric that people use to make valuations is expectations of the future, right? And as of this last round of earnings, corporate profits are still growing, employment is still strong, and GDP is still growing. Okay, so there isn't necessarily a reason to be super bearish. And that's why I think even though we're chopping and even though we've seen now over the last 2 months the longest period of stagnant market action, that's why at the end of the day I still believe that bulls are in control. The market should still be positive. Does that make sense?
Yeah, that makes a lot of sense.
So again, if we do happen to break this, it might not be because anything negative happened. It might be purely technical. It might just be because the market needs to acquire some breadth, right? Maybe there's too many people long here and not enough sitting capital ready to be reinvested. So what would people do? Good amount of people take profits, right? Demand weakens. We see a correction, and then all the people that have taken profits up here reload their equity lower, therefore creating breadth, right? When people take profits, now they have sitting capital waiting to be reinvested. Okay, so that's what the term breadth means, is how many people are sitting on the sidelines willing to buy. Right now, that number is likely pretty low, right? So what we may end up seeing that may cause a bit of a market correction, and again, correction is nothing major, right? Maybe 5% or so, right? Nothing huge. We've seen this recent correction. What was this, right? This was, we made a high, and within, again, this was, of course, driven by news, so we can kind of exempt this, but there's 17%. Here's a decent correction. That's 8% right there, right? Here's the most logical one, something similar to what we're seeing now. We see market push into highs, and then it gets stuck, right? We get stuck for so at the end of February, so all of March, and about halfway through May. So we see about a month and a half of flat action, and then boom, we sell off, and then all the people who took profits up here are then buying again. That creates breadth. We're able to work higher, right? So let's see this correction, right? This correction was very minor, only about 7-8%. Okay, so this is something that you might expect to see. And it doesn't have to be something negative. It doesn't have to come from bad news. Oftentimes, they'll spin it to make it seem like it's bad news, like, oh, CPI was really bad, or, jobless claims came in higher than expected. They'll spin some story to make it seem like that's the reason why, but unless it's inflation reports consistently increasing, we see a very terrible quarter of a bunch of the market leading names absolutely crushed on earnings, or we see some other black swan event, such as the collapse in real estate that causes a bunch of regional banks to need to liquidate and be, closed or whatever, right? Some sort of black swan event would be a reason for that. But if we see something like this, again, this isn't a high volume sell off. This is very typical. And this is just what happens when we get to a high and we start to see people, they start to run their valuation models and they start to realize, oh, I'm not willing to buy at this price. I'm going to take some profits. Boom, we get our correction. Yeah. Those same people buy back in, creates breadth. Okay. So that's something that we could expect to see. But until this area is broken here on NASDAQ, I wouldn't be looking to aggressively short.
Gotcha.
Anyone else have any questions regarding that, what we just talked about? Come on, guys. What I say? It's a discussion, not a lecture.
On the bottom, it's the RSI.
No, sorry. This is just it's a open interest. It's a stupid indicator, but Thinkorswim puts it on every chart as default. It's annoying, or every futures. I can throw a RSI on if you're interested in seeing it.
Yeah, please.
Sure.
Basically, because I remember someone was telling me all you need is the RSI to do the mutual fund trading.
I would really argue against that. Because when action consolidates for this long, that you get exactly this. It just gets stuck in the middle. Because RSI at the end of the day is still a momentum. Yeah. It's still a momentum indicator, right? It's the only time you're gonna get an overvaluation or an undervaluation reading is when we're getting trending action. So for example, right, we go on this big rip here, right, and this is right when RSI starts to kick up. And then you get this big old breakdown. That's when you get oversold. So RSI is not a useful tool for short-term trading. If you want to tone it down to a smaller time frame, it could be useful. But when you get action like this tells you nothing.
Yeah.
Right. But hey, if you can find a way to make
it now, when you guys are like, figure out this one.
Sure.
I cook that step count in like a day, so I'm like trying to get it down before I start messing around with it again.
Gotcha. Well, if you're trading futures, I have a feeling that you're going to be similar to Zunes, right? The way Huji trades requires a good bit of capital, right? Swinging futures and taking that risk overnight, that requires a decent bit of capital and risk tolerance. So I imagine you're going to trade pretty closely to Zunes and what most of the people trading futures in here do, right? Very short time frames. You're in a trade for maybe 5 minutes to 30 minutes at a time, right? Like, does that sound like you?
Yeah, for those seconds, because I don't even know like how to like make it how I want to.
Yeah, so if that's the case,
you're calls for that. Do it.
Makes sense. If that's the case, being completely honest, indicators are probably not going to be your friend. You're probably going to want to focus more on order flow, DOM, and time and sales data rather than indicators.
So you said, what was I need to focus on?
So if you want to do some research, you're going to want to focus on time and sales, order flow. Order flow is a bit tricky just because it can be used both for short-term and long-term. But order flow, most likely time and sales and DOM. A really, really popular tool that a lot of people use for futures trading is Bookmap. Now, Bookmap, unfortunately, is a paid service, but what it does is it looks just like Volume Profile. Except the difference is, who here, real quick, just unmute and say yes. Who here knows what Volume Profile is? This blue stuff over here.
Yes.
Awesome. One person, cool.
I think I have an idea of what it is.
Sure.
It's a shelf.
Okay, I'll explain it very briefly. So, Volume Profile over here is a reading of volume organized by price instead of by time. So all this blue down here, is volume organized by time. And if I'm being completely honest, it's pretty useless. It's never going to really tell you anything that you don't already know. Okay. But volume by price can be very useful. It shows you where, these shelves, these are where business has been done historically and where people have found value before, right? So this is where orders are likely to be sitting. Okay. So if we were to sell off here, say we were to liquidate under 2100, if you had to guess, where are the two spots that I would be looking to, buy the dip? Now, of course, the first one is obviously 2100, but for this argument, we're saying pretend it's broken down, right? Pretend the chart has broken below. Where are the areas that I'm looking to place some bids? Anyone can chime in.
You're looking at a 1900, right?
1900? That's a good guess, yeah. And again, we're this exercise, again, I want you to ignore the chart and focus on volume profile over here. In fact, I believe, yes, we're at all-time highs, so I'm gonna cut the time frame off right here, right? So we're gonna exclude this action, and anything that's happened above this point, I only want accurate data from here on, okay? So this is December 2023. So we're going to throw this back on the daily. We're going to go 2 years back on the daily. Gorgeous. Okay, so this is an accurate reading of everything we've only seen in the last 2 years. Okay, so I'll make it simple. So these are areas where value has been established, these shelves. Okay, so the spots that you want to see defended are the bottom and top of these tapers. So the first spot I'd be expecting buyers to show up. Oh, I'm going to use a box for this. The first spot you'd be expecting buyers to show up is right about here, right? Right about here at this volume shelf taper, we call these, where the edges of these shelves line up is called a volume taper, okay? And so looking through the chart, you can see this area's got a lot of spec. Bounce here before failing, resistance check, kind of spend some time here testing, reclaim, retest, bounce, right? So a lot of respect and a lot of pivots off of this zone here, okay? So this is the first spot where I'd be willing to try longs if we did liquidate below this, right? The next spot is going to be the top of this shelf. So we're going to mark this off at about 19,550 and maybe give it down to about 19,400. So it's a 150 point zone right there. It's not like a one level is going to be a perfect entry, right? But if you're looking at QQQ swings and you can handle 150 points of downside with time, this is a great area to try, right? So you can see obviously resistance for a long time. This is the first area we struggled at, held it here. And again, once we cut through that, that's the first place buyer showed up. And again, a little bit lower, but still right along the top of this shelf here, okay? So these would be the two spots where I'd be willing to try longs. Okay, now we could talk all day about volume profile and ways to approach it, but what volume profile does is this shows us where business has been done and where sitting orders are likely sitting, okay? Keyword there, likely. So if you are trading short-term futures, you'd want to focus on something like Bookmap. So what Bookmap does, the chart looks just like volume profile. Okay, your chart's going to look very similar to this, except it's going to be color coded. And the shelves on volume profile don't show you volume by price, but instead they show you active sitting orders. So volume profile shows you where orders are likely to be sitting based on previous action. Bookmap shows you where orders are sitting. Okay, so imagine you're looking at order flow and you see it's color coded like a heat map. Okay, I think I have a trial version of Bookmap here. I'm not entirely sure. I think it's only active on a few different charts. See if it'll load. So Bookmap has a deal with Thinkorswim and they do offer it through the platform. So yeah, we'll try. I guess these are the only ones that I can trial. I don't pay for Bookmap. I don't use it really, but that's because I'm not trading futures. So let's try it on Microsoft. Yeah, $40 a month, it says. So we're going to go to, let's see, how do I get this as a chart? Okay,
You don't trade futures, Wax?
No.
I thought I was hearing you talk about ES.
Yeah, I watch the ES chart. So the reason for that is because ES moves, it's a future, so it moves after hours. And SPY and SPX will typically gap the next morning to where ES is moved. So the reason I watch ES and call out ES levels is because that's what I'm watching. But I don't play ES. I play SPY and SPX. They all move the exact
Gotcha.
same. They all move the same.
Yeah. Wow.
But the reason why is because I have access to those overnight levels, right? Whereas if you're looking at SPX, you're not gonna know what the hell happened overnight, right? So unfortunately, I haven't used Bookmap a whole lot, but I wanna figure out how I can zoom this out because right now it's on a very small time frame. It's on a 30-minute. See if I can get it real small. It's not letting me adjust the time frame at all. Okay, well, anyways,
What software are you using? If you don't mind me asking.
Here we go. This platform is Thinkorswim, but right now I'm showing you guys the trial version of Bookmap. Okay, so here's how you would approach it if you were looking at ES. Okay, so right now Microsoft is at 411.58. Okay, and so what you're seeing here, a lot of these humps, okay, these are active sitting orders, and it shows you how many orders are sitting there. Okay, so you can see at 405, we've got a pretty decently sized shelf here. At 405, right, we've got this big orange line. Okay, so at 405, there are 4,390 shares waiting to be filled. Okay, so let's say tomorrow we liquidate. I can tell you that so long as these orders are still sitting and they haven't changed by tomorrow, by that time, if we fall into 405, it will get an immediate reaction. Okay, it will see a small bounce. How high? I don't know. It might be $1, it might be $5, right? But 405 will get a reaction with 4,400 shares filling there at that price. Unless there's some news and more than 4,400 shares are trying to be sold at that price, it will get a reaction, right? And the same thing above. Look at 420. 420's got a pretty decent shelf here as well. You know, it's a heat map. The more red the line, the larger the orders. Okay, so here at 420, there's 5,200 shares waiting to be sold. Okay, so the moment it hits 420, you can expect there to be some sort of rejection, or it could get absorbed, right? We could continue to contest 420 until all 5,000 shares have been sold and we start bidding higher. Okay, so if you're paying for Bookmap and you're looking at ES, you can see this real time throughout the day. So of course, this isn't much of a chart here. You're not looking at candlesticks. You're not looking at price action and making decisions. This is something that you would probably have up on a separate screen, right? But anyways, if you are trading short-term futures, Bookmap is something that I would consider investing in. Again, it's $40 a month. If that's worth it to you, I think it is, because futures, of course, it's you know, if you're not risking your own capital and you're trading on a funded account, it's absolutely worth the investment. Absolutely.
Probably know, how like going up and going down, it's got the same like that crazy one at 400 and it's at 420 in the red and 405 for the light blue and then that like 416 in the half. How would you know if it's going to go up or down?
How do you know if it's going to go up or down? What do you mean? What, the number of shares or the price?
417, that's the price, right?
No, it's currently at 411. 411.58. Are you asking how would you know if the price is going to go up or down?
Yeah.
You don't. You have no clue. But you do know with 100% certainty where the large orders are sitting. So, if there's a large order sitting at a given price, it's going to take time to work through that price. So, for example, if news hits and we get one of those Trump tape bombs that drops the market, it drops ES 30 points in a candle, this guy's going to be your worst enemy. Okay. But if we're just in a random day like today where there was no real news and market was just kind of going up and down, all day, this is going to be your best friend, right? Because this shows you this thing is very good at calling tops, right? So let's say we get up into 420. The moment we hit 420, this number is going to slowly go down, right? This number is going to slowly go down until it either A, if it hits 0, if this number hits 0, that means we're going above 420. And we're going to work through it because all 5,200 shares have been purchased and there is demand at that price. And we will continue to rise higher, right? If it only gets down to 3,000 and then stops, that's a pretty good indication that we're about to reject and we're about to sell from 420 because there's no one willing to pay higher than 420. The price isn't going to go above 420. Does that make sense? That's how you use Bookmap.
Question.
Yeah.
How do you know if they're buying or selling? Because red doesn't mean sell, right? So that would be selling. I mean, how do you know the 5,200 is all going to be selling or buying? Isn't it like you don't know, right?
Okay. These are sell orders. If it's in red and it's above the current price, it's a sell order. If it's in red below and it's green, it's a buy order.
Oh, okay, that makes sense.
Yeah. So
there are going to be buyers up there too, though.
There will, but here's the thing. Here's your midline. You see right here the current price, how it's all green below and all red above.
It's just more buyers than sellers.
These are so let's run that example again. Let's say we get to 420, right? And this midline is up here at 419. You might see, so let's run an example here. We hit 420 and this 5,200 number drops down to about 2,000. Sellers win and we start to fall. You might see 418 or so green at this point because we're still above 418. You might see this 418 number jump from 0 to like 3,000. Then okay, buyers are trying to save 418. Okay? And then it's going to be a game between back and forth until one side wins. So this is something that you are actively watching during a trade. This is something where you're watching to see how buyers and sellers are reacting at each given level. So again, we only have so much time tonight, but if this is something you're interested in, there are lots of videos on YouTube that will run through examples, right? It's hard to explain while the market's closed and you're not seeing any of these numbers move, but real time, again, I think if you have Thinkorswim, you have this option. So tomorrow during active hours, you can flip on Bookmap. Again, the trial version is limited to just 2 stocks. It's just Amazon and Microsoft, but you can look at those two and watch it real time, and you'll see these numbers close to the current price will be changing a lot and in real time, right? These numbers far away, like we're at 411, you're not going to see this 420 number change a whole lot. And same with this, you're not going to see this 405 level change a whole lot until we get close to it. But the prices close to the current price are going to be changing a lot. And this is what's going to tell you, is price going to continue moving higher or not? And again, it's dollar by dollar. We're not talking about capturing major moves here. This is for the example of you, Mr. Gorgeous, saying that you are going to be trading futures on a very small time frame. Okay?
Yeah.
So that's what this is geared towards. If you're looking at big time frames, you're taking in a lot more information. You're looking at overall structure. You're looking at potential news. You're looking at sentiment. You're looking at maybe even indicators, right? But if you're trading very short time frame, you would probably have this up. You would probably have Bookmap up in one window, and then you'd have another chart in another window where you can actually see price action, right?
Got it. Yeah.
But again,
all right. Thank you, bro.
But this is also something to be cautious of because the tape bombs we've been getting recently, where in the middle of the day Trump announces tariffs and ES drops 30 points in a candle. This is going to be your worst enemy because say 410, you're going to see this number drop to 0 before you can blink. And same with 405. We're going to cut right through it because I promise you on those flash liquidations, there's a lot more than 5,000 shares being sold, you know? So,
Yeah.
you know, this guy during a high volatility period, you know, those flashes, those quick 10-minute periods of high volatility, this is going to be really hard to trade with. But on a regular day, like today, where there was no news, nothing scheduled on the calendar, you know, just us and price action, right? If that's what
Yeah.
you're focused on, then, you know, that's where this would be really beneficial. But anyways, yes, this is for those who are trading futures and they are trading smaller time frames, right? So you can see the competitive advantage, right? Volume profile shows me where buyers are likely to be sitting based on historic action. Bookmap shows you where they are. Okay.
Would I be able to get that? You said it's volume profile.
That takes up a lot of hard drive though on your computer.
What does?
Bookmap, it could ruin your efficiency. Like if you only have a certain amount of RAM on your computer. I've tried that and it like fucked my computer over.
Really? Okay.
So be careful.
Thank you. No, I got a gaming laptop. It would be okay.
Ooh, he's fancy. What was your question, Mr. Gorgeous?
Oh, so I use Top Step. Would I be able to use this graph?
I have no clue. I've never used Top Step.
Oh, okay.
Might be a question for Huji. I know he's had experience with Bookmap before. Whether he's used it on Top Step, I have no clue. Doesn't Top Step have? Don't they let you trade on TradingView, right?
Yeah.
Yeah. So any indicator that's offered on TradingView, well, here's the thing: you can have multiple things. So, for example, Thinkorswim is completely free. I'll show you my account info right now. I don't keep any money in this account. It's completely free to me. I don't have to keep any money in here. I don't spend any money with Charles Schwab or Thinkorswim, but I have it for the charting purposes, right? So you can download Thinkorswim and then use Bookmap on Thinkorswim.
Okay, sick.
Yeah. So like this is What's that?
Sorry, no, finish. I didn't know it was interesting.
No, you're good. But yeah, Bookmap is like Thinkorswim, in my opinion, is the best charting platform. I know people live and die by TradingView, but me personally, I've been on Thinkorswim for 7 years now, 8 years now. I love them. I think it's the best. And if you want Bookmap, this is the one place I know for a fact you can get it. When it comes to other brokerages, you know, I like to think I know a lot and everything about the trading world, but I've never used it, so I can't help you out there.
Yeah, I'll go with it. Thank you.
Yeah.
Could you try Etsy specifically for leaps?
You want to check out Etsy? Sure.
Thank you.
I also want to ask, what platform do you use? Since you said you never use Top Step.
I don't use prop firms. I don't trade futures.
Oh right, okay.
Who was that asked
You know
about?
what?
Sorry. That was Jay. You want to look at Etsy?
Yes.
Yeah, let's check it out.
And then after checking out Etsy Wax, I have a question.
Oh shit, that's JJ. How you been, man?
It's been good. College been great, going great.
Hell yeah, man. Where you at?
Got into trading recently again.
Dude, I heard no need to sorry to out you here in the group, but someone told me you got a girl, man. Coincided with you ghosted me when I needed help with the server.
I had Diaz muted. You should have tagged me in the chat.
Okay, you're good.
That's my fault.
So Etsy. All right. So right off the bat, they are pretty depressed. Right. This thing has been ugly the past couple years, and unfortunately, looking at earnings here, it looks like their earnings have been very stagnant, which could very well be a reason for why they have not seen any juice as of recent. You know, their earnings. You know, they had a nice little quarter here and then immediately made less, solid quarter here, made less, and, you know, even though it's an increased quarter over quarter here, it doesn't change the fact that it's still down from a year ago, right? So it looks like they have hit a wall when it comes to growth. It looks like maybe their growth is just becoming stagnant. They're still profitable, thank God, but it looks like they're kind of just finding a valuation, and until there's some innovation in the space or some reason for them to start growing as a business again, then I imagine the chart's going to continue to look like this for a while. When I look at charts like this, I try to stay away from them just because there's no, there's no excitement, right? It's a very slow moving stock. And if you want to be the guy to try and predict that this thing's going to turn things around here over the next year, be my guest. But just from a trend of the last 2 years, it looks like their business is coming to a grinding, halt. And that's not a bad thing, right? The only unfortunate part is they don't pay a dividend, right? So with growth slowing down, everyone's expectations of the future are on the floor pretty much, right? And especially Etsy being as small of a company as they are, the fact that they've already hit a wall of, declining growth is not good, right? So, me personally, I wouldn't touch this thing with a 10-foot pole. But if you believe in management, if you've taken a look at management and you're like, hey, I trust these guys. These guys they're competent. They know the online retail business very well. And then you also look at their earnings and you're seeing, okay, they're investing a bunch of capital in this and that and whatever, and these are going to pay out over the next couple of years. Sure, be my guest. But in my opinion, this is not a technical play. If you're grabbing leaps on Etsy, you're doing more fundamental analysis, which we do not have the time to get into tonight. Fundamental analysis on this level for any stock is going to take you at least a couple hours at night on your computer.
Awesome, thanks. I just saw the base building up within the last 2-3 months.
Yeah, it's definitely positive. This tells me, okay, maybe they found a fair valuation, right? This is me saying, okay, fine. Sellers are finally starting to lose and people are accumulating shares. That's a positive. But until there's something to drive some excitement, like a very positive quarter or maybe a collaboration with a existing company, there's no reason it's going to see a squeeze and liquidate a bunch of shorts, right? Until that happens, it's probably going to continue to look like this. Now, you might get some pumps here where it runs, like right here, this was a nice run where it did, I don't know, let's do the math on this. Ran from 48 to, oh, that's not the tool I want. It might have these occasional moves, right, where it runs from 48, runs 30% in a couple weeks. That's great, but, that's not elite position, right? If you took longs here and caught it up to here. Hello? Sorry? Someone asked something?
I think that was Wax. Sorry. Sorry to contracted.
No, you're good, man. Don't worry about it.
Yeah, sorry about that.
But this is not something that you'd want to be leaps in, because you'd see this immediately when this sell day comes, your contracts are crushed again, right? So I think the chart has a very good chance of looking like this for at least a few more months. And if you're buying leaps now, obviously time is not your friend with leaps. So I personally would stay away from it unless you've done some fundamental DD and you think that they're going to revitalize as a company soon. I don't see anything from a technical perspective here that makes me want to grab leaps.
Awesome, thanks.
Yeah, man.
And I got a question where you walk.
Whoa, one at a time, guys.
Was first, go ahead.
Okay.
I was just wondering if you've hit NVIDIA yet.
Have I done what with NVIDIA?
Just to cover NVIDIA yet tonight, or
No, we haven't looked at NVIDIA tonight. But I will say, the data play it was today, unfortunately. So I don't know if you saw, but I put it in my planned plays last night, and we were looking for strength over 130 to grab longs. Unfortunately, we did not catch it. I was focused elsewhere. But if you had read the plan plays, you could have taken it this morning on your own. Just to again, I'm not trying to single you out or call you out or anything, but you guys, I list the criteria for entry on my planned plays, and just because I don't alert an entry does not mean that it's invalid. Okay. I just might be focused elsewhere like we were this morning. But I give those planned plays as ideas for you guys, right? In fact, Microsoft and Nvidia both did exactly what we, not Microsoft, Netflix and Nvidia both did exactly what we wanted today, but I didn't alert either of them, right? And that's just because my focus was elsewhere. So I post those planned plays as ideas for you guys. You guys do not need my alert to take them, right? If the criteria mentioned in the planned play is present, you can take it. Again, I'm not trying to single you out here, Minecraft Master. It's just a lot of people get this confused. They're like, "Oh, we didn't enter Nvidia or whatever," and it's like, "Well, shit, I told you exactly what to look for," you know. But yeah, Nvidia. Unfortunately, the data play was today. That reclaim of 130 was essential. We've broken into the gap range and we have re-entered the previous balance. So I think it's got room into the low 140s, but I don't think it's going to get much higher than that. Just because we do have earnings in about 2 weeks, and typically this is about the time we see the run up, right? 2 to 3 weeks ahead of the earnings is when we start to see run ups. And unless you plan on playing earnings, I don't see any reason to position in it. With that being said, yeah, I would love to see it get back into the 140 area before then, but is it a guarantee or is it confident? Definitely not. And unfortunately, Nvidia is one of the names that reports very late in the earnings season. And I don't know. They like to think they're special or something, but I always hate it because we get all these earnings out of the way and we get sentiment for the market figured out, and then we still have to wait another 2 weeks for Nvidia to report. So, yeah, unfortunately, I think today was the day to play it based on criteria I listed last night. But from here, you just want to see it sustain this area here. Again, I know I don't have volume profile up anymore, but actually, we can just throw it on real quick. That'll make this a lot easier to explain. Let's trim our time frame down to last, say, 6 months. Sure. So check this out. Here you've got this big giant shelf, right? So they're working back into the previous balance. From here, you just want to see this, 132 to 133 area defended. And then if that's established, they can continue to work higher, maybe into 137, maybe 140. Hell, might even fill that gap. But again, those would be my upside targets if you are positioned in it. Otherwise, I personally wouldn't chase longs. Just with earnings coming up, it'll probably hit a point here pretty soon where it just goes flat and becomes really stagnant leading into the earnings.
About that, given the fact that Amazon, what was it again? Amazon and Meta both increased their AI buys. Would you say it's a good play to try and fill the earnings? Because I think the AI demand is still going to be there, at least for the quarter that we have.
I mean, it's a good thesis. In fact, I would argue that's a really tricky question. I
think companies doubled their what's it called, their cloud storage demands.
Yeah, no, it's a great thesis, but at the end of the day, we're trying to predict earnings here. So the unfortunate part is, even if every company did buy double, you have to imagine that that's being baked into the expectations of this upcoming earnings as well, right? So people are actively putting that into their expectations, right? And that's being adjusted for the expected numbers on Nvidia. And not to mention, they are selling as many chips as they can produce. Do you realize how many back orders Nvidia has? Half their products are on back order. So it doesn't matter how high demand is, they can only sell as much as they can produce, right? So that's one of the negatives of Nvidia is they just don't have the production capabilities to supply all the demand, right? So that would be my devil's advocate argument there. But otherwise, at the end of the day, we're trying to predict earnings here. They've established a fair value here over the last 3-4 months, and I personally am not going to even try to give any prediction of how the earnings will go until numbers are out. It's just you'll come to realize there's no point. There's no point, right? Now you could do some real detective DD and try to find some stuff, but chances are it's just not going to get the reaction you think. You'd have better chances just playing a lotto the day of earnings, right? But even then, it's a coin toss that's 50-50, and it's not even really 50-50. The odds are still against you with the potential IV crush the next day. So, um, I again, I'm just not going to speculate on earnings. It's just it's not worth any of our time.
I got you.
Yeah. All right, Captain. I know you're itching. What do you got?
Yes, sir. Can you take a look at ESTC?
ESTC.
Yes, ESTC. I don't like how this daily candle closed, but the hourly still looks clean. Overall, it looks clean. Not the most volume. The options don't have the most volume, but more than some of the ones I've showed you already. So not awful.
ESTC. I like where you're contesting. You know, what did we just talk about with volume profile, guys? Check this out. Now, what do you notice how well it lines up with supply? Right? Rejection, 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 boom, 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 right? So, yes, the technicals would tell you, hey, there's resistance there. Yeah, but this is why, right? This is why resistance is there. So, the cool part is, I like this structure. The structure looks good. And holy hell, do they gap on earnings every time. If you want to play an earnings lotto, this is the name for you. Oh my god, bro. Every earnings is like 20%.
Yeah, it's crazy.
Oh my god, bro. Every earnings, it sees a massive move.
What ticker is that?
Take this chart off my screen. You've attracted the degenerates. ESTC. I have no clue what this company does or where they are. Let's check them out real quick. Why is it doing this? There we go. AI. Of course it is. Okay. So, yeah, I mean, I think you already know, man. I don't even know why you show up to these sessions anymore. You're looking at the same thing I am, aren't you?
Yeah. It's also just to, if anyone else takes some use out of having these charts in their watch lists, and if it just some interesting stuff sometimes I just like to bring in here.
Yeah. I like this. The only thing is, wow, this thing has a really solid ADR too. This is good. Dude, where do you find these fucking takers? Anyways.
This is another one of those. Yeah.
Anyways, you already know what I'm gonna say. If you start to build value above 118, you can look for this recent pivot high and then maybe this. But until that happens, this is your best risk to reward short spot, right? Until then, the best play here is the risk to reward game, and that's just playing shorts with a stop being like a daily close over 120 or something, right? Even if you're just looking for something small, right? It gives you risk. Let's say under right here at 116, you're risking $4. Worst case scenario at 120. Best case, let's say give you the benefit of the doubt and make it real slight at 120 or 110, your first target, right? So you got a 6-4, about 1.5 to 1 risk to reward there on shorts. So I think that's the safest play, but I know what you're looking at. So if you find strength over 118, that validates your long entry, and you can start looking for the higher things. 124 at this pivot, maybe even a little gap fill up here around 130. So yeah, you know what you're looking at.
The amount of volume we built out, like that going. If we commit, not gotta commit to it, but I think if we do commit, we can find our way to bounce up to that gap.
Yeah, and one thing that I don't think we ever talked about in our one-on-one sessions is the more times a resistance is tested, the weaker it becomes, right? So, yeah, it might seem counterintuitive. It might seem counterintuitive, but the more times a resistance is tested, the weaker it becomes for the simple fact that it makes people nervous. You got to think of it from a psychological standpoint. Every single time it's tested, you get shorts getting scared and closing out. Right? Now, if they reload their shorts lower is another question, but if that's the case, they're idiots because now they're positioned worse, right? Which therefore could, what's the word I'm looking for? Which could, what's the word? Fuel. We'll use fuel, which in that case could fuel a greater squeeze. Okay.
Right.
if they're positioned lower on average, if the average short is positioned lower than previously, it takes less of a move to trigger them to liquidate their shorts.
Right. That would make a lot of sense.
Right. There. That was the way I should have explained it. But yes, so every time a resistance is tested, the resistance becomes weaker. Okay. So here you have on the 7th or 8th attempt.
Got it.
It should be coming up quick. But again, until it breaks, your best play is still the risk to reward short.
Got it. That's interesting. I didn't think about it that way. I always kind of thought about, testing a level from the underside is just shorts, basically just adding it break even pretty consistently and continuing to add to their short position, sometimes to keep their short in the green.
I'm sure there are people that do that, but
Right.
that's not the masses.
Right. Which makes sense.
But
Yeah.
anywho, I like the chart.
Another funky one is VEEV. This one needs a couple more days here. But this one's a little weird. Also had a funky gap up from earnings that I think could kind of, because what I've started to notice a little bit is when we gap up from earnings and then fall back down, we always end up kind of near that same area where we gapped up to. Kind of in a way to fill orders that like used to be there,
Okay.
At least that's something I've just started to intuitively think about, because if you think about it, when you get such a big move, higher, and so much happens where you get a big jump, and then you get a huge liquidation all in the same 2 days or like 36 hours, right? There's still a ton of liquidity all that's sitting in that area, both long and short, that are just, orders that are still open or waiting to be, filled, whether that be more shorts when we get back to that area. And price, in my, opinion, kind of price follows liquidity, right?
Yeah.
And so if there's a ton of liquidity in that super similar area, especially where we gapped up to our earnings, price is going to kind of magnet to that general area. It's interesting because if you zoom out, there's like a ton of time spent down here. And so this is another one of those that it's like, this one's not super clean. I don't even know what they do. just interesting. Just interesting a little bit based off that gap up that we kind of failed right back under that huge shelf.
Yeah, I mean, this one's tricky. This one's definitely tricky. How are the earnings? Earnings are all over the place. Not actually, this last year has been pretty consistent growth.
One thing that I want to say to anyone here who is trading single stocks versus the S&P, and one of the things that I've kind of learned to live by a little bit is that when looking for stocks to trade, if it's not screaming at you to buy it, there's more stock.
Yeah.
You don't need there's no reason to get attached to anything. And that's what I used to do. I'm going to be super honest, is I used to really want to see something in a stock. And so I forced myself to see something that wasn't there. Right.
Yeah.
But if you can kind of, if the stock isn't screaming at you to buy it or to sell it, just find something else.
Yeah, and this is something we talked about in our one-on-ones. If I remember correctly, a lot of people they're so hell bent on trading one ticker that they'll draw a bunch of trends, they'll throw up a bunch of different indicators, they'll try to see something that's not seen, right? And the problem with that is, with trading, you don't want to be the guy thinking outside the box. You want to figure out what the crowd is doing, right? So if a setup is clear, I'll be honest with you. When I do my nightly outlook and I'm making my plan plays, here's my watch list over here, right? I start from the top and I go down. Here's what happens. This is what my screen looks like when I'm looking for plays. Until I see something that looks good. It's that, right? You should not, have to look at a chart and find something for 30 minutes to, to think that there's a play there, right? A good setup will stand out. And again, it might take some time and experience before you get to that point, but if you know what you're looking for, it'll stand out very easily. Okay. But anyways, we are at our bell here, so we are going to wrap up. But does anyone have like one last general question before we go?
I do real quick, Wax.
Yeah, what's up?
What is the Fibonacci golden zone?
I have no clue.
Oh, shit.
A Fibonacci golden zone?
Yes.
I've never even heard of that. I've heard of Fibonacci fans, Fibonacci retracements, Fibonacci circles. I've heard of all the Fibonacci's. A Fibonacci golden zone, I've never heard of.
Do you believe in those Fibonacci indicators?
Okay, so the one thing I will use is a Fibonacci extension. So that's for something like a breakout to all-time highs. That is very useful. So we'll use this example. It's like when you're looking for a breakout from something at all-time highs, right? So we'll use meta here, right? Very clean, upper resistance here. Now the tricky part is we kept making lower lows. So that's where it might get tricky. But something like this, where we'll draw our fib here at 600, and then we'll use the low that it made here at 550. So your extension targets above that high would be right here. We spent the day here, and then up here at the 161. So you can see both these areas got a fair bit of respect, but in the long term, we did make higher, right? So the one that I will use occasionally, and it's just to pick targets. It's like for Netflix, for example. Netflix is breaking out from highs. If we want to look at the short term here, it did have a nice clean range. It topped out at 998, and then we retraced down to, I'm just going to use the full zone here. So targets above this extension would be 1010, 1025, and then bigger picture, maybe 270 or 170. So that's the only reason I've ever used fibs is just for extension targets, because at the end of the day, it's a respected indicator and other people are looking at it. So this is a whole conversation for another day, but sometimes it doesn't necessarily the math surrounding it or anything like that, but are people looking at it? So that's the reason why VWAP is respected, right? It's not so much that the day's average price is super important, right? If you think about it from a logical standpoint, why would the day's average price mean anything, right? Especially if there's news or the market's reacting to a catalyst. Why would the average price of the day mean anything to you, right? Well, it's because there's 1.5 million other people around the world watching that line, right? They're watching that VWAP line and they're making decisions based off of it, right? So it's the same way for Fibonacci. It doesn't necessarily matter that those numbers occur naturally in the world. It's just that there are thousands and millions of other people in the world drawing those lines and making decisions based off of them, right? So of course the big ones are going to be your 50 and 200 SMAs, your VWAP, your MACD, your RSI even, right? So all those cliche indicators, I would argue that most of them have no real meaning to how a chart moves, but they get respected because there are millions of people across the globe watching those prices and acting on them. Okay? Does that make sense?
Yeah.
All right, that's confirmation enough for me. All right, folks. I'm gonna wrap the session up here. I hope you guys got something from it and learned. It's very motivating to continue doing these. But on this note, I'm gonna wrap us up. And again, if you have not been to one of these before, or you want to learn more, all of these sessions are recorded and posted on our YouTube. So if you want to refer to those, the link to our YouTube page is in our socials channel, or you can just type in BullPrint Trading on YouTube and find us. And you can always refer back to me with questions from that. Okay. This one, I think I'm going to title it Bookmap versus Volume Profile. Okay.
Thanks, Max.
All right.
Yeah, thank you, Wax.
Yeah, you
Thanks,
guys have
I
a
appreciate it.
you guys have a good rest of your night, and we have a very tricky week ahead of us. Okay, so take it slow, get a good night's sleep, and let's watch Pal's testimony early tomorrow morning. Okay.
Well,
What time is that gonna be at? What time is the talk starting at?
One moment. Everyone say hello to YouTube real quick.
It's good, YouTube.
Yo.